Okay, so today is part one of kind of my framework for how to invest in commercial real estate and replace a six-figure income. And this is in theory. This is really kind of based on some of the clients that I've helped, and then uh, refining it over time to really be able to take this to teaching someone that has never invested in commercial real estate. All right, so I'm going to kind of walk through the framework here. This is a kind of a just I drafted this up to be able to do this podcast and video, and I'm going to walk you through essentially the steps and the questions that I ask. And I'll tell you kind of the reason I'm creating this. And the primary reason is a conversation that I had with a gentleman recently who is interested in getting into commercial real estate. All right. And so he and I had a good conversation. He found a property. Unfortunately, he lost it. And when I started to explore the deeper reasons in terms of why did he lose it, why did the deal fall apart, it became clear that because he's new to the world of commercial real estate, he didn't know how to evaluate the deal, and his expectations didn't line up with the seller. And so what I thought I would do today, I'm not going to go into the very specifics of his deal because that's not important. I think what's more important is to be able to take this framework and then apply it to your own investing purposes, okay? And this is just how I would do it. This isn't to say that it's the only way or the right way. It's just how I've learned, observed, and then potentially how you could take it yourself. I just want to make sure that my sound is, okay, good. It's coming through the Yeti. I'll probably move it a little bit closer. Now, the first question that I ask anybody that's looking to invest in commercial real estate is this: are you planning to be an active or passive investor? Okay, and so what happens is if you decide to go down the passive route versus the active route, they're very different in terms of the skill sets that are required and then the resources. So I'm going to give you four variables or four resources that you'll want to vet these questions through. And it comes down to, time, money or capital, experience, and relationships. And experience and knowledge are kind of related. And then relationships are how many people in the world of commercial real estate do you know? Okay, so those are the four variables. I'll say it one more time: time, money, experience, and relationships. And then do you plan to do passive investing or active investing? Okay, so the passive route is actually fairly straightforward. In my experience, what you really need are just two things. You need money, right? If you're going to be a passive investor, and you need some knowledge, right? I say you need enough knowledge so that you're not what I call dumb money. You're not getting taken advantage of investing in the wrong deal. So that is, you don't need a lot of time, right? Because you're going to leverage off other people. And I guess you could say you need relationships, right? Because if you're going to invest, then you likely you'll want to meet people that have the deals that you want to invest in. Okay, so that's a passive route. Now, most people that come to me, they're more active investors. They're looking at finding deals. Okay, so passive is basically putting your money into someone else's deal. Active is finding the deals yourself. And then it comes down into two questions there. Is it going to be all your money, or are you going to raise other people's money? Okay, so that's one of the first questions that I would ask. And the reason that's important is because if it's your money, then frankly, obviously you want to be careful with it. You don't want to lose your money. But if you're raising other people's money, you really need to be an expert, in my opinion, because people are trusting you to find great opportunities, generally value add, because, without getting into the nuances, it's usually pretty hard to get someone to invest if it's what I call a coupon clipper, to get a 6 or 7 or 8% yield if it's your first deal, because there's lots of opportunities for wealthy people to make 6, 7, or 8%. Okay, at least that's been my experience. So generally speaking, you're going to want value add deals if you're raising other people's money. If it's your own money or you're raising money, here's kind of how things break down now. All right. This is something I was just thinking about. And it comes down to your market, the market that you're investing in. And I classify these into 3 different markets. You have hyper competitive, you have mid-level competitive, and you have low competition. And here's what I mean by this. A hyper competitive market in today, right, as of this recording, would be a market like Vancouver, would be a market like Toronto or the GTA, would be a market like Austin, Texas, would be a market like Dallas. These are markets where there is more money chasing less deals. And so it is harder to find opportunities, right? Just because you have $10 million doesn't mean you could place it, because I mean, I literally had an offer on one of my properties today, and I would classify Calgary is in a mid-market, right? Cap rates are still decent, you know, kind of 5.5 to 6 range, depending on the asset class. And that will be the next question we get into, or the next kind of topic. But I think that if you just start thinking about, okay, what market am I in and how competitive is it? Because the more competitive it is, generally speaking, the more time it's going to take to find a good property, right? I know people right now in Vancouver, as well as the GTA, that are doing unbelievable deals that will make them 7 and 8 figures on a single property. But it didn't happen overnight, and it's not the first property they ever bought. Okay. So these are people that have been in the game for a little while. They're still sourcing opportunities. But if you look at what they have time, they have money, they have experience, and they have relationships. Okay. And that doesn't happen like that. It takes a bit of, obviously, being in the game to get that. And so now, if you have capital, maybe you can partner with those people as an opportunity or as an idea, right? You find the people that are really attracting and finding those really good opportunities. You can kind of ride their coattails if you have the capital to do that, and obviously a bit of a relationship. And I would say inside of that, you need to be able to say, this is a good deal, this is a good operator, versus this is an operator that maybe you should stay away from. So why do I say all this? Why am I kind of sharing this and focusing on the market so much? And I'll tell you why. I've seen people out there that are kind of teaching new investors how to get properties in what I would call like tertiary markets, or really small markets, maybe 5,000 to 25,000 people. And there's nothing wrong with that. But what I would suggest is that there's a couple of challenges. Okay, so when you invest in a small micro market or a tertiary market, there's a couple of things that you just need to be aware of. Number one, you have low liquidity, right? So a low barrier market, meaning, I don't want to say anybody, but most investors could probably walk into Whitecourt or Edson or Hinton, or, you know, some of these kind of bedroom communities, 8 to 10,000 people, and there's just not a lot of velocity of deals. So you could probably go in there and find a 6.5 cap rate on an apartment building. That same apartment building in, or 7.5 for that matter. But there's a reason for that. Hard to get good property managers, difficult to sell if you need to get out, and but you do have less competition. So, I mean, just appreciating the market that you're in. Secondly, the asset class that you're in, right? So right now, if you wanted to buy an office building in Calgary, you would have a lot of brokers that would be taking you out for fancy dinners. If you wanted to buy, let's say, industrial Class A, or you wanted a great multifamily property, you would be taking the brokers out, right? So it's really like, where is the leverage? And in my experience right now, the pendulum is definitely a seller's market in certain asset classes, industrial and multifamily. And then on the other end of the spectrum, you know, you start to move away a little bit. You have retail and office. And this is going to be market dependent, right? I mean, I had a client that was in Vancouver, and he had made an offer on an office building with 35 other offers. Okay. Here in Calgary, you might have 2 offers. Or 3. I mean, obviously, a lot of variables, but I just want to give you some things to kind of consider. So just to kind of recap, are you an active investor or a passive investor? If you're an active investor, are you using your money or other people's money? Inside of that, what market? Hyper competitive, mid-market, low. If you're in a hyper market, some things to kind of consider would be how much time do you have? And can you find someone to JV with? Because I think this is one of the fastest ways. Like, whenever I went into a new market, now I had some benefits that you may not if you're new, but I was always looking for who is going to be what I call my shepherd, Who's going to protect me when I go into this new market? Who's going to help me? And I was comfortable talking to brokers because I knew enough to be able to determine whether or not the broker was telling me what I wanted to hear, or and I could essentially fact check what was being presented. If you're new, that's going to be more challenging because frankly, you're just not going to have the experience, if you will. I was just on a podcast today with Brittany, Investor Girl Brittany, I think is her handle on Instagram. I mean, it's really cool what she's been able to accomplish and do in a very short amount of time. And I just want to give you this kind of quick story. So she was asking me about investing in real estate, commercial real estate. And I have noticed that I've been killing myself for 2 years, not killing myself, but I put a lot of energy into it, into my Instagram. I have like less than 400 people. It's a joke. And Brittany has 226,000. And I just said, so like, here's kind of how the game works in commercial real estate. I said, how's the game work in Instagram? How do you actually grow a following? And she said something to the effect of, well, actually, after about 1.5 years, I figured out that what you really needed was a couple of key influencers that would basically either shout you out, share their information, make a comment, and you would get like 500 people overnight or 1,000 people overnight. And as soon as I say it, it makes a lot of sense. But until that point, I just thought, oh, you got to create content, do hashtags, share lots of free information and jump through all these hoops. When in reality, there's a much straighter line to getting to the outcome that you're after. And once you see that, you can't not see it. And so just like in commercial real estate, hopefully what you're seeing here is relationships are probably at one of the most important things, because with relationships, you're able to get the experience and knowledge, hopefully from people, right? I will caution you that sometimes what I see with new investors, because it happens to me a lot and it's a bit of a pet peeve, and that is people will want to have like 35-minute, 1 hour conversations and continually get free information and content. And while I love to help, you only have so much time. Like today, it's 6 o'clock. I've literally got to go and cook dinner here for the family shortly. And if I spent all day just giving out one-on-one advice to people that were seeking it, I would never get anything done. And so you just want to be respectful of the people that you are interacting with, because especially brokers, they only get paid when they do deals, right? That is the business model they are in. They're not like a lawyer, right? You call up a lawyer and they charge you $500 an hour, you're going to be watching your clock and saying, you know what, I just need 15 minutes of your time. However, with brokers, because they don't charge by the hour, it's very easy to have a casual lunch or dinner or coffee or whatever. But the broker is looking at their watch saying, you know what, if I don't think I'm going to get a deal out of this person in the next 30 days, I got to go to my next meeting because I got to make some money. And there's a lot of pressure on them. So I think that's just understanding the game and the people that you're dealing with. Now, I just want to make sure that I'm not missing anything here. Okay, so this is one other thing I want to touch on, and that is often, if you're new to the world of commercial real estate, you're going to have questions around certainty, right? If I hire a coach, if I get into this, if I put in the energy, like, how do I know I'm going to get a deal? And I think you can start to see that there's all these variables, right? Like if I pushed clients to go into these tertiary markets, I could say, sure, you'll have a deal in 60 days. But if I don't believe in that market because I see too much risk and I know the low liquidity and the challenge of managing those properties, then as a coach, I'm not going to tell you to do that. And so it's something that I struggle with, if you will, in terms of consulting people, especially when they're in hot markets, right? Like Toronto or Montreal, not Montreal, well, maybe Montreal, but Toronto and the GTA here in Canada, and then certainly some of the other hot markets in the US. Because the truth is, it might take 6 to 12 months to find a good property. But I think that it's important to understand that the whole time you are searching for properties, you're building a skill set. Okay, that skill set is how to identify a good property from a bad property, right? If you've only looked at 5 properties, it's going to be hard to tell. If you've looked at 50 properties or 500 properties, all of a sudden you can start to see. trends and really start to clearly map out, okay, here's the locations I want to be in. Here's the asset class. Here's the size. Here's the vacancy. Here's the development. Here's the land or the zoning or whatever it happens to be, depending on what asset class you choose to invest in. And that skill set then leads into confidence and certainty. Because one of the things that I see frequently with new investors is they see a good deal, but they don't know it's a good deal. And that's fair, right? I mean, how would you know a good deal from a bad deal if you've only seen 1, 2, 5, 10 properties? I mean, it'd be like if you went out looking and shopping for a house and there was only one house on the market and it was $1 million. Like, is that a good deal or is that a horrible deal? Well, it's hard to know. There's nothing to compare it to. In the world of commercial real estate, because there's not really a central place for that, CoStar, but most new investors aren't going to spend $600 a month and commit to a year, so $7,000 just to start looking at all the properties that are available and look at transactions that have taken place. So I think the best way to develop that skill set is to really get out there, start looking at properties on a frequent basis. And ideally, even what I mentioned to this gentleman, even though it wasn't, it wasn't self-serving for me in any way. He asked, what's the best way to learn this? And I said, well, go find someone in your market that you can shadow or mentor under. And I said, that's how I learned it. I didn't pay my mentor, but I paid him because I left my job. And so for 12 months, I made no money, right? Because you eat what you kill in the world of investing in commercial real estate. And so I probably left a little too prematurely in hindsight, but it's obviously paid off well. But the reason I mention that is there's a cost to getting that mentor's attention, right? And it could be that you pay them in some capacity, right? There obviously has to be a reason for that mentor to invest the time and energy with you. And so, and it doesn't have to necessarily be money, but there should be some sort of a reciprocation back and forth. And let me just see if there's anything else. Okay, so we talked all about that. So I'll just leave you with this, and then I'm going to roll. The question to ask yourself are, how much time do you have to dedicate? In my experience, you don't need like 20 hours a week. That's one of the benefits of commercial real estate, because if you get one great deal, it has the potential to replace a six-figure income, right? Obviously, the deal has to be big enough and whatnot. So I'm not making any kind of income claims. Just understand, if you buy a $10 million property at a 5 cap, that's $200,000. No, what is that? $500,000 a year in NOI if you bought it all cash. So how much time do you have? I would say minimum, if you're going to be an active investor, you should be dedicating about minimum 2 hours, maybe a little bit more initially, right? Once you find the property, maybe it goes down. How much money do you have? In commercial real estate, minimum $100,000, at least in my experience. And most people I work with have kind of that $250,000 to $1 million plus. How much experience and knowledge do you have, right? This takes some time. It's a process, not an event. So the more you're in the game, the more you will understand the language. You'll see behind the scenes. You'll see deals come up over and over, and you just build that muscle, if you will. And then the last is relationships, and these obviously take time. And one of the things that I talked about with Brittany was the importance of social media, obviously, and podcasts. And I have a friend who literally started and a mastermind with him. Oops. And one of the things that we talked about, and he told me off, like in one of our private conversations, he said, Shane, when I partnered up with this huge influencer in the space of real estate, if I said the name, you would likely know. He said that this person went out and asked about 10 people if they knew him. And everyone said, yeah, I know Wayne. That's not his real name, but let's just say. And it was because he had interviewed them on his podcast. And so he had built these relationships well in advance of needing them. And so if you are new, you have time, you have a little bit of money, and you're looking to kind of acquire that knowledge, and you don't want to hire or get coached, one idea would be to create a podcast or something where you can bring people on, understand that you're going to want a bit of an audience, right, in order to attract those people. But that might be an interesting way to start to grow your network. So that's all I got. I got to roll just under 20 minutes. So Bye for now. Hopefully this was helpful. If it was, leave a comment below. If this is on Facebook, on YouTube, certainly on the podcast. By all means, if you have any questions as it relates to investing and you're looking to work with someone and you think that I might be that person, by all means, happy to let you know what my coaching program looks like. And if not, then like I said, look in your backyard to see if you can find someone that can help you. Okay, take care.